People are starting to get cautious, and for good reason. It seems like the Bitcoin ETF is not the never-ending source of demand for Bitcoin. We have actually seen outflows from Wall Street. Wall Street is now selling Bitcoin. The question is, how long will this continue? Let's have a look at the data most people are not considering. Now have a look at this chart. This is the Bitcoin ETF assets under management. So we're looking at all kinds of different ETFs here, and this is denominated in US dollars. We can see how the assets that are in those Bitcoin ETFs move in value with the Bitcoin price. No surprise here. When the Bitcoin price falls, then the asset under management for the ETFs fall as well. When the Bitcoin price is going up, then the AUM rises as well. When the Bitcoin ETF launched at the beginning of 2024, a lot of people were anticipating that Wall Street would just continue to buy Bitcoin, completely irrespective of the market situation. Thus, if there's all this demand, this ongoing demand, that would mean that potentially there won't be that much more of a bear market, because the bear markets would get bought up by those ETFs. But is that really what we're going to see? We might have the answer in this chart here. This is the assets under management of the Bitcoin ETF, not in US dollars, but measured in Bitcoin. And of course, the volatility in that chart is much lower than the volatility when we look at the assets under management in US dollars, because now we are really just looking at in and outflows from the ETF. The Bitcoin price volatility has no impact on this balance. And yes, initially when the ETF launched, we saw a lot of demand that then cooled off. Then we saw a second wave. But since beginning of February of this year, it doesn't look that great anymore, right? We have seen outflows. They aren't yet massive, but this trend is definitely not very encouraging. There seems to be a bit of a correlation now with the outflows and the Bitcoin price. In other words, when the Bitcoin price is going down, it looks like the Bitcoin ETF demand is also slowing down. In other words, the Bitcoin ETF holders tend to sell as well. Now, is the Bitcoin ETF the source of those price declines? I do not think so, because only 1.1 million Bitcoin are held through those instruments, or 5.6% of the supply. There's another 95% of Bitcoin supply that actually move the price. It's not a causal relationship. I think the Bitcoin price is simply going down, and the Bitcoin ETF holders take profit as well, as do other long-term investors outside of TradFi as well. And so here are the daily changes, right? We see quite a bit of volatility if we just zoom in. But again, the last 1 to 2 weeks had not been that great in terms of ETF demand. Now, what does that actually mean? The way I interpret this data is that the Bitcoin ETF is simply another onboarding mechanism for more capital, but it's not necessarily an ongoing stream of demand. Thus, we will likely going to continue to see bull markets and bear markets. We're likely going to continue to see Bitcoin price drops of 30, 40, 50, 60, potentially even 70% from the all-time high. Because isn't that fascinating? This is a long-term Bitcoin chart, right? When Bitcoin was just a few cents all the way to $100,000, and we did always have our bear markets. And yes, the intensity of the bear markets did go down over time. We had a more than 90% drop over here. We then had a slightly more than 80% drop over here. Again, roughly 80% in 2018. And the recent drop was a bit less. It was 75% roughly. And so the bear markets do get a bit more tamed over time. They are less aggressive, they are less painful, but at the same time, the upside potential is also muted, as in there are diminishing returns for Bitcoin. The bull markets in the early days had been massive, right? 50,000% over here. Again, another 50K% over here. Then this rally was 10,000%. And the recent rally was only 2000%. And what we got from 16K to 100K was only 500%. So over time, the risk to reward is actually worsening, because the reward is shrinking much faster than the risk for a bear market. This is a natural development, right? Because the more people know about an asset, the more efficient the pricing is. And still, the risk to reward for Bitcoin is probably still better long term compared to stocks or compared to property, but it is not as good as, say, 10 years ago. Now, there is an effect that is much, much stronger than the ETF demand, and that is what the long-term holders are doing. Most people do not have the behavior of the long-term holders of Bitcoin on their radar, but I believe this is where the actual secret is. Check out this chart. What we're seeing here are the capital inflows and outflows. And we've got this for the ETF in green, and we've got this for the long-term holders in blue. And most of the time we see ETF demand, as in there's money flowing into the ETFs, and that supports the Bitcoin price. This has changed, of course, recently, but still most of the time we see inflows. The long-term holders of Bitcoin, they are a bit smarter. They tend to take profit when Bitcoin is very high. So when it moved from 16K all the way to 70K, that's when there was a lot of outflows from those long-term holders. They sold the top. Then we saw quite a bit of correction up to 53K in Bitcoin. And that's when the long-term holders acquired a lot of BTC. Then we had our rally one more time, and the long-term holders took profit, much more even than at 72K. I personally had a very similar behavior. So I also sold at 72K. I then bought back in later, unfortunately a bit too early at around 62. And then I sold at around 95. So my personal behavior is very similar to what we see with those blue indicated waves over here. I am not yet buying back into Bitcoin, but some long-term holders already started to do that. And this, I think, is very, very important to monitor. And I will always talk about this when there will be a change. So feel free, of course, to subscribe over here. Just have a look at how well this indicator worked in the past. If you buy when the long-term holders are massively buying in as well, you are doing the right thing. And when you sell, when they are selling massively, you're also doing the right thing. You don't necessarily have to look that much at the transition, right? Currently, we are transitioning from selling to buying, but the best times are really when we're at peak levels in the long-term holder supply chain. So maybe we're going to see more and more purchases by the long-term holders. If we do see that, I might consider buying back in as well. Currently, it's still too early in my opinion, but it's very noteworthy that there is a shift. Now, this is the medium term. When we zoom out a little bit more, when we look at the average cost basis of the market, of course, is still comparatively high. Now, why do I say this? I say this because everybody in the market has a reference price, right? Say you bought Bitcoin for $20,000, then the current prices are still attractive for potential selling, right? You might sell some Bitcoin in order to put this into other asset classes or not to just use this for consumption. But if you bought Bitcoin at 100K and you're currently down on your Bitcoin holding, you might continue just holding Bitcoin if you believe in the asset long term, right? If you believe that Bitcoin is the hardest of the assets, that fiat currency expands faster than the Bitcoin supply, then over time, of course, the Bitcoin price should go up. And because of that, you're simply just holding through the bear market, right? This is what most people do that are in losses. So the reference price to when we actually bought does matter. And the same way this works for every individual investor, this also works for the market as a whole. And that's the beauty of the blockchain. With the blockchain, we can actually look at the reference price of the entire market. We can look at every single Bitcoin, at what price did it move in the past, and we can then average out all of those prices. And then we get the reference price of the market. Is the market currently in aggregate in losses, and are the sales rather going to slow down? Or is the market in aggregate rather in profit? And might some people take that profit? And I really like that indicator to navigate the macro. So that's the line in orange, right? It's the realized price. It's the aggregate cost basis of the market. When the current price is below the realized price, that's when the market in aggregate is in losses, and that's when most people tend to not sell unless you really, really have to, potentially for private reasons. But when we are in profit, we simply just continue continue to ride the current momentum until it slows down. So really, the very best purchases always happen when the current price is below the realized price. It's when people call Bitcoin a scam. It's when FTX is collapsing. It's when Terra Luna is collapsing. Celsius is collapsing. When all the ICOs go to zero, etc. Right? It's always at peak market pessimism. And we are, of course, currently getting closer to that realized price, but still, it's at 43,000 and we are currently almost 2x above that. So whatever dip we are currently buying has to come with a disclaimer, right? It could still go lower because most people are still in profit. It doesn't look like this, right? Because especially the active traders, especially the people that watch YouTube, they tend to be more in losses now. But the long-term investors, they are all still in profit. And since most Bitcoin is held by the long-term investors, those people might sell. It's not happening right now. We've just seen this flip over here, but there definitely could be another black swan event, right? We could see another COVID crash in traditional finance. We could see another banking crisis. Whatever hits the markets globally could also transfer over to Bitcoin. And Bitcoin is to a degree a levered bet on pretty much everything risk on. Now, besides the realized price, we can also have a look at the long-term holder realized price. So now we're not looking at the entire market. We are just looking at the long-term holders. And again, during bear markets, we tended to get very close at least to that realized price. And unfortunately, that's currently at $25,000. Do I believe we're going to hit that price? I don't think so. I think the long-term holders are going to sell earlier and push up that line before. I've talked about this several times on this channel, right? I try to time the medium term as well. I don't just time the overall macro cycles and I only buy when we are below the realized price. I also buy when we are above the realized price, but currently I'm rather pessimistic. We are below the 120-day simple moving average. So historically, this is the best moving average for Bitcoin. We should be in the market whenever the price is above the moving average, and we should be out of the market whenever the price is below the moving average. So this is a backtest that worked very well, that served me very nicely in the past. I have been able to buy low and sell high with that moving average, and currently we tend to be rather bearish. We should be betting on falling prices. It's not a perfect indicator, right? We do have our failed signals over here, but overall it catches the trends pretty well. So this is nothing about average cost basis. This is just about the current momentum. And when the momentum dies down, the short-term holders sell first, and then afterwards the long-term holders as well. In the end, the entire game is all about finding the right portfolio allocation. So we don't want to have 100% in crypto because we don't want to see our net worth go down by 70% in a matter of a year. But at the same time, we don't want to have everything just in stocks or just in precious metals or just in property, right? We want to have some kind of a mix. Now, some people just have one mix that they try to keep static, as in maybe 5% Bitcoin allocation, and that's it. What I believe is smarter is to find some kind of a trading range for the different asset classes. So there's different ways to value different asset classes, right? Let's say we buy property, then we've got the gross rental yield. Let's say we buy stocks, we've got the PE ratios, right? The historical PE ratios, say the Schiller PE. When we buy Bitcoin, I think the realized price is a pretty good metric to say if we're currently very cheap or very expensive. But we can also just draw random lines. And even that, I think, is better than just having a static allocation to the different asset classes. And we do think that an asset class is comparatively cheap. Based on whatever model, we should have more allocation in a portfolio. When we think something is expensive, we should have comparatively less allocation. It seems pretty obvious, but I don't see many people actually managing their wealth actively this way. This is Bitcoin with two randomly drawn lines. So those are simply just curved lines on a chart. There's nothing scientific about this. But what's interesting is how well those curved lines connect both the bottoms and the tops in the Bitcoin price. And we just use this very simple approach. And we tend to have less allocation when we are closer to the top and more allocation when we are closer to the bottom, it tells us that currently the potential risk to the potential reward speaks towards rather having a low allocation to Bitcoin, to not buy this bottom too much. The long-term holders, they bought over here at 54k and they sold over here at 72k. So they exited when we were relatively close to the top, and they bought when we were rather a bit more balanced. Not at the absolute bottom, but at least a bit more balanced. Currently, we tend to be rather, again, closer to the top. And the long-term holders aren't selling right now. But again, I think there is a potential risk if the current momentum, this negative momentum below the 120-day SMA, if that continues, then we might go down all the way to 40k. And then we might see the long-term holders starting to sell again, right? They tend to sometimes flip-flop the position during sideways movements. Clearly, the overall situation in crypto has changed recently. And there seems to be one event that started it all off. What we've got over here is the Bitcoin price. And this red circle marks when Donald Trump launched his meme coin. So that's this over here. Most people got burnt with that meme coin. If you bought this in the first few hours after launch, you made money. If you didn't, you lost money. Since the launch, Bitcoin lost 21% of its value. Of course, the Trump token lost much more. A lot of other altcoins also lost more. And so the majority of people lose, of course, when the market looks like this. There's pretty much nobody that has their entire crypto portfolio in Maker or in Bearer or in Bitcoin Cash. Even if you hold those tokens, you probably have a diversified portfolio and you're down with all of those other tokens. Now here's something that's not so obvious. We see Bitcoin over here. Bitcoin went up by 14% in the last year. And this is now the top 100 ordered by their performance in the last year. And there are a few altcoins that did better than Bitcoin. Two of them being gold derivatives, so PEXG and Tether Gold. But there's also others that performed slightly better. But the vast majority of altcoins actually performed much, much worse. If you picked a random altcoin in the top 100 1 year ago, you've got roughly an 80% chance that you underperformed simply Bitcoin. And that's of course a problem, right? Because altcoins have more risk, and so in theory, they should also perform better, especially during times when Bitcoin tends to go up. And so I don't try to find the needle in the haystack. I don't try to pick the bearer coin in order to then make money. I do the exact opposite. I bet on the vast majority of altcoins doing worse than Bitcoin. And most of the time, that strategy makes money. Have a look at this, for example. This is Matic relative to Bitcoin, a very constant underperformance. Or this is Balancer relative to Bitcoin. Again, a very constant underperformance. And we can make money from that relative valuation. We don't have to bet on Balancer or on Matic going down versus the US dollar. We can bet on it doing worse than Bitcoin and make money when this thing continues to go down. Or we can also mirror that chart, right? We can just bet on this continue to go up. This is now Bitcoin relative to Matic. That's the logarithmic chart. This is the linear chart. So why does this happen? The reason is tokenomics, right? It's the altcoins that print more and more tokens, and that token allocation goes to the insiders, it goes to the developers. And for meme coins, we don't necessarily have an expanding supply, but for meme coins, we tend to have a lot of ownership by the insiders as well that simply sell off over time. And that's why Bitcoin performs so well versus all of those altcoins. And that's why I believe those are the kinds of charts we want to bet on. Yes, we can of course try to time Bitcoin itself, and we can try to buy this at 16k and then sell it at 100k. And this is a possible way to make money. I'm also trying to time Bitcoin. But why would we try to pick the few altcoins that perform still okay? Why not just flip this thing around and make money when those bubbles are red? So for example, over here on the 6th of December, I have made a premium update video how I have sold some of my Bitcoin because a liquidity crunch was incoming. So that was over here. I've made another announcement on the 25th of February how I've sold all of my speculative Bitcoin and how I'm selling all of my altcoin positions. And that was over here. I opened a position betting on falling prices of Chainlink on the 23rd of January. I opened a short position on Dogecoin and on PancakeSwap on the 14th of February. And the reason why I'm sharing this is because I've now closed the Chainlink position, so it lost 42% in the span of a few weeks. I've also closed the Cake short, which went down versus BNB by 27%. And I've also closed the Dogecoin short, also in profit. So really, when you know what you're doing, if you know how to do the proper risk management, that you don't get liquidated, and when you have the odds in your favor during times like this, when most altcoins underperform Bitcoin, then it is rather straightforward to make money like this. We don't have to find the needle in the haystack. We don't have to make 100x returns with a random meme coin. We can simply just let our capital compound by making 20% here and 40% over here. Most people are scared of betting on falling prices, but that's why I've made dedicated tutorial videos on the topic: how to do the proper risk management, how to set up those positions also in DeFi and Web3, not just with centralized exchanges, how to do this cost efficiently, and also how to select the right assets to short. There's more than 100 tutorial videos in total in premium. The link is down below. It's thebitcoinstrategy.com. Of course, I'm also sharing in detail how I currently see the market. There's a premium update video every 3 to 4 days. And I challenge you to look at other influencers, what they said during those times, right? Have a look at the date, have a look at the title of those different premium update videos, and let me know who said already on February 18th that it might make sense to bet on falling prices, or that crypto stopped expanding in the last 2 to 3 weeks, or how your influencer is selling aggressively. I don't really see many other influencers saying it like it is. Most YouTube channels just sell hopium. Most YouTube channels just want to push up their own bags, but they're not really looking realistically at the prices. They're not really looking at how much are people actually already in profit and when will that profit be taken. So if you appreciate during times like this that I keep it real, then of course feel free to give this video a like. Feel free to also subscribe. I publish videos regularly. And of course, feel free to also check out premium. The link is down below. Looking very much forward to seeing you there as well. Cheers.